Good morning, traders. Today I will be sharing you the daily market analysis of what happened in the last 24 hours and also why gold fell and what are the new opportunities. So let's talk about the USD index. So the dollar plunged on Tuesday, accelerating its decline after Besant's comments. China is facing further scrutiny from the Trump administration for imposing more restrictions on semiconductors. The dollar index is falling, pressured by a sell-off in US yields. On Tuesday, the dollar rebounded from a two-month low at beginning of the week, boosted by safe haven demand, and the move was mainly influenced by US President Trump's insistence on imposing tariff on Mexico and Canada. As risk sentiment was hit, there was a wave of profit-taking rebounds in US dollar shorts. The Trump administration issued a memorandum asking a key government committee to restrict Chinese investment in technology, energy, and other strategic US sectors. Weak personal consumption expenditure may put pressure on the dollar. It also called on Mexican officials to impose tariffs on Chinese imports. In addition, the United States has proposed to impose fees on Chinese made ships entering US ports. It further suggested that the US government review a 1984 tax agreement with China that exempts individuals and companies from double taxation. A renewed escalation of US China tensions may lead to a slowdown in the dollar's recent decline. The US dollar index, which measures the value of the greenback against its six major peers, fell slightly after rising for two consecutive trading days, trading around 106.7 in early European trading on Friday. However, analysis of daily charts suggests that the index may see a bullish reversal moving with a falling wedge pattern. The 14-day RSI of the technical indicator remains below 40. Latest is at I think 39.6, indicating a strengthening of bearish momentum. In addition, the US dollar index is trading below 107, which is below the 89-day moving average, and 107 round mark as now turned into a solid resistance level. This exacerbates the weakening of short-term price trend. On the downside, the US dollar may fail to this year's low 106.13 and may continue to trade at 105.9 and 105.89. A break below this key support zone could strengthen the bearish bias and could push the index to 3-month low of 105.41, last seen on December 6. As for the key resistance level of the index, it is at 107 or 107.07, and a break would point to the 107.23, which is the 14-day moving average level. Today, I think considering shorting the US dollar index around 106.4, stop loss at 106.5, and target would be 106.05 or 106. So, guys, let's talk about crude oil. So, crude oil futures traded below $70 in European trading on Tuesday, with limited movement after briefly breaking Monday's high earlier in this session. It traded around $70.8 in early Asian trading. Crude oil prices extended their rebound amid concerns about short-term supply tightness. The US Treasury and State Department announced a new round of sanctions on Monday, which could exacerbate concerns about short-term supply tightness, putting pressures on WTI prices. As peace walks as peace talks progress, all traders are closely watching development in Ukraine. The extraordinary summit of EU leaders on March 6 will focus on additional support for Ukraine and potential European security guarantees. Meanwhile, US President Trump is moving towards a deal without the participation of Ukraine or the European Union. Direct talks with Russia which adds uncertainty to the geopolitical situation. Although sanctions on Russian oil exports have disrupted global supply chains, a potential end to the war may not significantly increase Russian oil exports due to the OPEC plus production restrictions. However, geopolitical risk premiums may decrease, which may put downward pressure on crude oil prices. At the beginning of the week, WTI oil prices once rebounded from a 2-month low $70 and a 3.1% drop on Friday, the largest single day drop since November 2020, November 2020, since November 25, led to some profit taking. Fundamentals are expected to have a negative impact on oil prices, which will put further pressure on increasing supply and reducing geopolitical risk. Yesterday's drop to a new low this year at 68.6 shorts support this view as negative momentum strengthens. Moving averages are a fully bearish configuration and multiple bearish death crosses are formed, including 30/200 days and 20/55 days. Crude oil prices have broken the psychological barrier of 70 and the support of 69.86, which is 76.4% of the Fibonacci retracement level, with the price of 68.98 to $79.37, which indicates that after 2 weeks of consolidation, a larger downtrend to 68.5 low of December 2023 last year and 67.5 low of December 10th, 2024 may resume. If the price breaks back above $70, the next level we will to revisit the 70-day average of 71.79 and 71.47, highest of last Friday, which may trigger more buying interest, and the next level will challenge 200-day average 73.43. Consider going long on crude oil Consider going long on crude oil near 68.8 today, and the stop loss will be 68.6, target will be 70.2, 70.4. The correction in gold prices remain good and now pushes gold above the key 2900 per ounce level. Despite a strong downside bias in the dollar and a general decline in US yield, spot gold traded near 2515 Asia on Tuesday after soaring to the record high of 2956 on Monday. With a gain of more than 12% in 2025, it was held by safe haven demand triggered by US President Trump's tariff plan and an increase in the holding of the world's largest gold-backed exchange-traded fund ETF. Gold prices will continue to climb in the coming week and months or longer, and the path of least resistance for gold remains sideways, higher with the potential for continued gains as long as uncertainty persists. US President Trump warned last week of new tariffs to come. These plans are widely seen as spurring inflation and could spark a trade war. Increasing demand for safe haven assets such as gold, SPDR Gold Trust, the world's largest gold ETF, set on Friday, its gold holding rose to 904.38 tons, the highest since August 2023. From a technical perspective, gold prices have shown an upward trend in 2025 with a rise of more than 12% and repeated record highs. Currently, gold prices are close to 2950 and the historical high of 2956 remains a key technical level. If gold prices break through 2956, it may trigger new upward momentum and push gold prices to higher targets. In short term, the first technical resistance level for gold price appears at 2956. If gold prices break through this level, they may further challenge the high of 2980. Once the above highs are broken, gold prices are expected to further rise and will next phase the market recognize psychological resistance of level of $3,000, which is another important technical level marking the possibility of a new upward trend in gold prices. On the downside, gold has clearly support at 2912, which is the 14-day moving average, roughly in line with Friday's low. It is more important if gold fails to find a support at this level. Further support could see for downside at 22900, which is a psychological mark. Consider going long on gold before 2912 today. Stop loss will be 2908 and the target can be 2930 or 2935. Australian dollar, US dollar continued to fall on Tuesday, retreating for the third consecutive day approaching the 0.6320 range as concerns about US tariffs continue to hurt the market sentiment. The Australian dollar recovered its intraday losses on Tuesday as US Treasury yields fell and the US dollar weakened. Investors are eagerly awaiting Australia's monthly inflation report on Wednesday, which is expected to provide important insight into the future direction of monetary policy after the Reserve Bank of Australia's recent hawkish rate cut. Australian dollar US dollar face challenges as US President Trump said late on Monday that broad US tariffs on Canada and Mexico will go forward after 1 month delay expires next week. Trump claimed that the United States was taken advantage by foreign countries and reiterated plans to implement so called reciprocal tariffs. The Australian dollar found support as China, Australia's close trading partner, released its annual policy statement for 2025 on Sunday, which detailed strategies to advance rural reforms and promote comprehensive rural revitalization. Given the close trade relationship between China and Australia, any changes in the Chinese economy may affect the Australian dollar. AUD/USD traded around 0.6350 on Tuesday within an ascending channel, reflecting bullish market sentiment. The 14-day RSI, a technical indicator on the daily chart, remained above 55, supporting the positive outlook on the upside. Australian dollar USD tested the 100-day moving average of 0.6401 and the market psychological barrier of 0.6400 for immediate resistance. A successful break above this level could improve the bullish bias, and the obstacle lies at the upper line of the ascending channel around 0.6440. On the other hand, Australian dollar USD may find immediate support at the 25-day moving average of 0.6296 and 0.63 market psychological level, followed by 0.6273, which is 34-day moving average level. Consider going long on Australian dollar before 0.6332 today. Stop loss will be 0.6320 and target will be 0.6378 or 0.6385.